Righty ho, everyone, and welcome aboard. Thank you for joining us for our weekly Sunday market update with myself, Geoff, who is coming to you from Tasmania in Australia. I'm a senior trader with Actions to Wealth, and we present this show each and every Sunday at this time. Thank you for joining us once again. Going to be talking today to two people from the UK. Ash is going to talk to us about the data that's going on around the world and previewing what he'll be looking at for the upcoming week, as will Chloe, who of course is our resident trend trader extraordinaire, and we'll be talking to her very, very shortly as well. Before we do such things, I just want to share a couple of, sorry about that, wrong button. I just want to share a couple of things that may influence the markets this week. One of them, of course, was last week when we had, Super Thursday, we call it, and there were four central banks strutting their stuff and telling us exactly what their monetary policy was going to be upcoming. One of those, and I think probably, obviously the Fed was significant and moved the market a bit, but the other was the Bank of Japan, who really gave no hint in their monetary policy statement that anything was about to change, yet something did change, and they intervened in the market and sold a lot of US dollars and bought, you guessed it, Japanese yen with the funds, and that intervention saw the yen strengthen somewhat. And those who were on the right side of that, of course, were smiling, but I don't think we'll see such fireworks this upcoming week, because that was last week, of course. This week, I don't think we're going to see such fireworks, as it's pretty much a speechathon that I see coming to us throughout the week, with all the Fed members having something to say. We've also got talks from other central bankers, Kuroda tomorrow, Lagarde tomorrow. It's pretty much a speechathon. And of course, they'll say things that may turn the market as well, or may underpin what we already think we'll see as the week goes by. Interesting last week, Ash, as I introduce you or bring you in, as in particular towards the end of the week. And we have seen markets move substantially on the back of that, in particular with the yen strengthening, as I say, potentially or probably most likely on the back of the Bank of Japan intervening, which they tend to do from time to time. But historically, I believe it doesn't make that much difference. We've seen the gut reaction to that. Can we expect some more? Or what's the data telling us for the upcoming week? How are you, buddy?
Yeah, not too bad at all, mate. Not too bad at all. As you say, quite a crazy end to the week last week in the end. I think the speech from Jerome Powell and obviously the central bank action took the market. I don't know. I mean, it kind of had a mixed reaction. Initially rallied, and then it started to come down quite aggressively. But Friday was an incredibly aggressive day. Just a lot of selling and strength in the US dollar. And as you say,
it's like a skyrocket, isn't it?
Oh, it's crazy. And the way that the Bank of Japan came out and decided to intervene into the currency market, but without doing what everybody else is doing, which is by raising interest rates. And then, of course, we saw the Bank of England come out with a more dovish action, really. And we saw the pound weaken off the back of it, euro increasing from, I think we had a rate of around about 115 right up to 112. So you know, that's a 3-cent change in the pound versus the euro, which is huge in a matter of a day, really. So there's
somebody on Trading Buddies on Thursday suggested that might be the case.
Who was that?
Well spotted.
Yeah, well, you know, I'm obviously watching the pound euro quite closely, probably more closely than some of the other combinations, and that was my concern, that we would see the pound come down quite aggressively, and that really has happened. And if you look at the central bank action from the UK, it's been a lot more dovish. Even though they're raising interest rates, they're going at a much slower pace. So I thought that may well happen, and it did. So we'll see what happens from here. But the data this week is quite interesting, mate. I'm going to show you. I'm going to show you
through
what's happening here, and maybe we'll discuss, whether things are about to change or not. Let me just make sure I bring up the correct spreadsheet here, because we need to look through for the currencies, and I will show you what we got. And we are going to look here now. This is, I think, hyper fascinating, and let me just make sure we got the right screen. I think it's that one we need. So what we're looking at here is the COT data for the US dollar, and so many people that look at it and just think, yeah, it looks like a load of bars. But if we dive in a little bit, then the first thing that we should be noticing now, this is the whole year's worth of COT data going on right now. Now, the first thing that is notable is where this bar is. And this is the net position. This is the long and the short net position. Now, the most interesting thing is where this bar is in comparison to the rest of the year. And if you were to draw a line right across here, you would see it's at the lowest level of the year. So the net positions have been shrinking, and they have shrunk from the previous Tuesday to last Tuesday. So we are, I think, to the 20th. So from the 13th to the 20th, we did see actually positions starting to come out of the US dollar. Now, if we bring in the short positions, and that would be this one here. Yeah, that's that position there. Then this is really where we start to see the genuine picture. So when you look at the net, it's effectively the long positions minus the short positions. So what this is now showing us is that it's the short positions which are increasing, and they are increasing substantially. Not only is this a huge jump from this point to this point, but on top of that, it's the most short positions on a yearly basis that we've had. So that is potentially quite telling. And if we were to bring up now a chart of the US dollar, of the dollar index, then obviously what we see is a huge jump in the US dollar. Everybody knows that there's been a massive rally. So this is on a week by week basis. And if we go down to when it was when the COT data was reported, it was reported here. So they were net short really up to this point, and building the shorts. That's the key thing. And then what happened was a huge rally in the US dollar over the next few days. So Wednesday, Thursday, Friday was a big rally in the US dollar. So really, if we sort of start to think about what this could mean, what we've got is a situation where commercial traders are, or certainly sort of positions on the COT reports are attempting to get out of the US dollar. They are effectively saying that, we may well be hitting a level which is getting pretty high, and we get this rally we get this big rally sort of after that. So it's possible that they are just too early, and they've really started to stack up on the shorts, and there's a big push to the upside. They need to now flip positions and go back in long, which would of course cause this, which would cause a big explosive move to the upside. So if we were talking that those positions were reported on Tuesday, and then we saw Wednesday, Thursday, Friday with this rally, they've got short positions in, and of course short positions have to become long positions if price goes through those positions, and that's maybe what we saw on Wednesday, Thursday, Friday, and it also is suggesting to us that the participants are getting incredibly nervous about the move to the upside. So then the question comes in, is this potentially or getting close to a blow off top? And that is what this would suggest to me, that we may well be getting to a point where the market is getting enough to those extreme highs that a blow off top is either happened or is about to happen. If you look at the volume that happened on certainly Thursday and Friday, it's at an extreme. So this is sort of indicative of that blow off top kind of scenario. Now, if we then bring in the seasonal data on the US dollar and see if it backs up, the theory that there possibly could be a blow off top here. And of course, there's a few different ways that you could interpret the data, but certainly with a lot of selling coming in, that doesn't need interpretation. There is selling. There's a lot of selling coming in for the US dollar. It's just about whether the selling actually does eventually kind of be turned into a trend to the downside. Now, if we look at the US dollar, now we're still in the last week of September, and you can see that the last week of September does tend to kind of bring the US dollar higher. But when we get into October, what we'd be looking for is a potential dip. Now, just because there's extreme selling, it doesn't mean that the US dollar is going to tank. It just means that there are positions now being closed at the highs, and the risk now is to the downside. There's a lot of risk that there could be a big flooding out of positions in the US dollar. So they're suggesting that the risk is to the downside. In October, we do see a dip. So historically, we have seen a dip in October. So really what the kind of data is pushing us towards, or certainly pushing me towards, is to look for possible positions in the US dollar for the first week of October. And it might come slightly before, it might come slightly after. It might be that this final week of the month, which does tend to be more volatile, maybe sort of like people start to get into positions then. It could be that we're waiting for something else. As Geoff quite rightly points out, we got speeches this week. So those speeches are kind of opportunities for somebody to say something and the market to interpret it a certain way and then start to kind of go in a certain direction. And on top of that, at some point, the central bank action will be priced in. And if we kind of look back at that US dollar, and we see where it is on the longer term timeframes, this is on a daily. On the weekly, we haven't really got kind of too much information. But if we come down to the monthly and see where we currently sit at these highs here, we're getting very close to this area that was previous resistance that hadn't been tested. And now this area it was support, sorry, not previous resistance. It was a support line. It came down, but it wasn't tested on the way down. And this is, this quite often happens where if an area is not tested, it becomes quite a strong area. So it's just possible that we might start to see some flipping of positions here, mate. That's really what I'm looking for. And I'm not saying that I will necessarily trade it this week if there's nothing set up, but I'll certainly look for opportunities that suggest that we could be getting more to a distribution pattern rather than this continuation pattern. And I'll probably be looking against the Aussie, the Kiwi, and possibly the Euro as well. Even though I don't particularly like the Euro zone economy, the COT data, again, if we were to kind of look towards which currencies, suggest that we should be possibly looking for against the dollar, then it does actually suggest when we look along here. This is the Euro. That's the buying in the Euro. In actual fact, let me bring this into over here. So these are our net positions. Big buying going on with the Euro. From selling positions. So huge buying going on with the Euro. That's the Euro. This is the Kiwi, and this is the Aussie. So if you were to look through the others, that's the pound, pretty flat. The Swissy actually decreased last week, from the previous week. So really it's the Aussie, the Kiwi, and the Euro. And I'll be doing fundamental analysis to find which one it's going to be. And I can tell you now, I've checked the seasonals out for all those three. And because of the weakness in the dollar of the first part of the month of October, all of them tend to rally. The Aussie probably pips it. slightly, and maybe the Kiwi. So I'll be edging towards those before I look at the fundamentals. But after I've done the fundamental analysis, then I'll probably have a pretty good idea of what I want to look for. But what is significant is if the dollar does start to go in the opposite direction, then we can start bringing into the potential buying basket silver, gold, Bitcoin, Aussie, Kiwi, Euro, NASDAQ, S&P. You know, we got a whole bunch of things that we can all of a sudden start to consider possibly bottoming out if they've been coming down. And the yen might be in there as well, mate. I mean, it's a tricky one, isn't it? Because you know the central bank isn't getting into a position where they're changing policy, but as you quite rightly said, they have started to go about things in a more hawkish way through the back door. So it's possible that we could consider that as well, but it probably won't be for me. But it's certainly, you know, people that might be interested to put it in on the list. I'd say that's a fair shout.
Yeah, look, I think it's a case of not yet, to be frank.
Yeah, exactly.
If you have a look at that dollar index as you did, you know, the breakout suggests little breakout, bigger breakout, bigger breakout. You know, you call those 3 tin soldiers, call them what you want, but there is strong bullish sign, and it's really difficult to trade against it at the moment. We'll talk about this more tomorrow, I'm sure, in Trading Buddies, but it's just, I think, ease off the pedal at the moment and see what happens. If this can turn around, it'll be an interesting read on the charts. I think we'll find out.
It will, mate. And you know, this is where sort of, you know, as traders, we've got to be professional and say, look, now we've got we need the technicals to line up. You know, there is certainly things under the hood which are suggesting that the dollar is topping out. There's not so much suggesting that with the S&P bottoming out, to be fair, and the NASDAQ bottoming out, or gold. I mean, gold is all over the place. But the dollar is potentially topping out, and the COT data is telling us that. Seasonal is suggesting maybe that there could be a little bit of weakness. But we've got to be professional and say the technical patterns have to match that, because if they don't, then we haven't got a trade. And if we are technical traders, then we wouldn't be looking at shorting dollar anyway. But if we're fundamental and COT traders, then we are at an advantage because we have the added skill of being technical traders. So that's got to give us the visual aspects now, that we can see that traders are coming. We know that that's what it's suggesting, but are they actually doing it? Well, they've got to show us that. You know, that they may well be doing it. It might have been that spike in that we saw did take out a load of stops to the downside, and they start building again, you know, every single time it goes up. So there's lots of ways they can play it, but until it says it on the chart, we've got nothing to do, as you quite rightly say.
All right, mate. Sunday morning, where you are? What's on today? Got a picnic on the beach?
Well, actually, Brighton girls are playing over at the Amex, so I'm going to take Molly over there, and we're going to go and watch a game of football.
I was going to say, I'm glad you added the football. I wasn't quite sure what was going on there.
Yeah.
Have a great day, mate.
Thank you, buddy. Thank you. You too. I'll see you in the morning.
You bet. We'll catch up then. Have a good Sunday. All right. Well, the Americans are struggling, believe it or not, this time to launch their latest moon mission, but really no such problem, as we've discussed with the US dollar, as it continues to dominate the markets. That really should be good news for trend traders. So let's get back to the UK right now, where expert trend trader Chloe shares her thoughts for the week ahead.
Hi everyone, welcome along to Trader Talk Radio, and I'm going to go through a few charts. I mean, we've got a lot of things trending at the moment based on the US dollar strength, which is fantastic. We've had some quite strong moves, so a lot of it is going to be a case of waiting a little bit patiently for some pullbacks before we can get into trend trading again. I'm going to start off with gold here. I'm bearish on gold. If we just have a look at the monthly time frame, I just want to show you the levels that I've got here. So we've relatively recently broken down through this pretty significant horizontal level of support, and the next major horizontal level of support beneath this is all the way down at 1530. So there is quite a distance potentially for gold to go if the downtrend continues. So with that said, on the daily time frame, there's that level all the way down there. In terms of trend trading, all that is required is to wait for price to pull back. And this could be on the daily time frame, or it could be on any of the lower time frames. I'm happy to trade this short on any of the lower time frames as well. Wait for a pullback on any of those time frames, and then get into a trade to the downside. Now, obviously, I wouldn't be necessarily targeting this level down here as a TP1. I would be looking to scale out along the way and perhaps scale in and out of trades all the way down as long as the trend continues down there. So that's something that I'm keeping a close eye on, definitely high up on my watch list. The crude oils as well. I am bearish, not as bearish long term, but I am bearish on the crude oils. This is the next level of support down here. It's around where the monthly S2 level is as well. We're in the last week of trading for this month, for September. So those monthly levels are not too much of a concern to me. I anticipate that if this level is reached, perhaps there may be some support and a bounce, but then I would anticipate a pullback, perhaps another entry opportunity. And then by the time price gets back down to that level, the monthly S2 will have moved, and therefore there could be some further space to the downside. So a little bit more room to the downside on WTI. I'll be looking for a pullback on the daily time frame, but also I'll be looking on the lower time frames, perhaps 4 hourly for a pullback, perhaps up to this level here, and then another move to the downside. Brent is fairly similar in terms of price action, although there is a horizontal level just here, which price is just reaching. So that's not something I would want to trade through. I'd have to wait either for price to get through that level to continue trading short, or I just have to wait for a pullback and perhaps another move down. But that level, definitely I would want to take profits before reaching there if I'm trading above it. A couple of currencies that are trending. I mean, we've got quite a few actually. I'm only going to cover a couple of the majors. Eurodollar to start off with. You know, this has been trending downwards for the best part of the year. It still continues to do so, looking very, very bearish indeed. Again, we do have the monthly S2 just down here, which I usually use as a level of support, and certainly a bit of overextension. However, by the time price reaches down to there, yes, it may react, yes, it may pull back, but I'd be happy to take another opportunity after a pullback, given that that monthly S2 level is going to move in the not too distant future. So that's something that, again, I would be looking on the daily time frame for a decent pullback, but at the same time, I'm happy to look on all of the lower time frames as well for short opportunities into Eurodollar, with this down here being my next major level of support. Cable, I don't know whether you guys are aware of our pretty dire political situation over in the UK at the moment. I'm sure Ash will have something to say about that, but it's not looking too good. We've just had a new mini budget which didn't go down well with the market, so price is pretty much crashing on cable. Got to be a little bit aware that there is going to be perhaps some gapping in the market, perhaps a little bit of upheaval once the markets open on for us Monday morning. So I wouldn't necessarily want to be getting into any trades early on Monday, but definitely bearish at the moment on cable, continuing to look for short opportunities. Obviously, I need to see a pullback there. Aussie dollar also very bearish, and it's well past the monthly S2 level. I'm just waiting for a pullback on these, ready to get in short, and looking on the lower time frames as well for shorter opportunities. And Kiwi dollar as well, looking really, really bearish, really solid downtrend there, just waiting for a pullback and then looking for opportunities into that. So that's a very quick overview of a couple of things that I'm going to be looking out for this week. Back over to you.
Many thanks, Chloe, and thanks to you. Interesting, those trends just very, very strong. And as Chloe said, pullbacks required if you're not already in them. If you are, Merry Christmas. You're having a wonderful time, I would have thought. All right, let's have a look at what I'm looking at for the week ahead. And 4 of my what I call game changer bars have appeared on the scanner this Sunday. And one of them, or the first of them, is the Aussie dollar versus the Canadian dollar. Now, it's interesting that these game changer bars, as I call them, key reversal bars really is what they are. And I note with interest that not one of them is US dollar based, which really actually makes me feel far better, because I think the US dollar, as Ash and I were speaking about, is very, very difficult right now because it's so hot. It's like, red hot, and expecting pullbacks on that. I don't think anybody's expecting reversals anytime soon, but I'm happy to steer clear of it at the moment until that becomes obvious or otherwise. Aussie CAD, as I say, is one of them. The interesting part about Aussie CAD, of course, intrinsically, I'm kind of okay with this, the short, but the CAD is also affected quite often by what oil is doing. And oil at this very moment is not in a good place in terms of what happened on Friday. That said, we are at the bottom of this channel, so I would be expecting a little bit of a bounce here. Reversal, not so sure, but bounce, maybe. We shall see. That is interesting, and I will take that on board as a marker to what may happen to the CAD throughout the week. We shall see. So going back to that Aussie CAD, the shorts, maybe that makes sense, given that the CAD is at a bounce point and may strengthen. Aussie not faring so well, obviously against the US dollar, not going very well at all, but against a bunch of other currencies, not so bad. The Canadian dollar, as I said, intrinsically, I'm with this, so it wouldn't be the worst trade to take, in my humble opinion, if you do want to trade the weekly charts. Of course, when I go through these weekly charts in the game changer bars, it's very much a case of this is a directional bias, not necessarily a trade. It can be a trade, and my goodness, if you traded them all last week, you would have won a mozza. They really were great indicators as to what happened. And as I say, if you traded them, they would have done very, very well. I'm not advocating that you do that per se, but I am advocating that you take notice of the directional bias. So there's an obvious take profit level down here, and I don't think this is the worst one by any stretch of the imagination. So Aussie CAD is certainly there. Eurocad, definitely been a bear on this for the longest time. And I think this is one that really is on my watch list, and I'll go back to this in just a tick. Pound CAD is the third of 4, and wow, we've spoken, or Chloe's hinted as to why the pound is in awful trouble. Will that continue? Well, again, it's so oversold, it's impossible to trade short for me, and certainly with that bar, I certainly wouldn't be putting a stop loss there or an entry there. What I would be doing, as Chloe's suggested, of course, is waiting for a pullback. And wow, it's way oversold. Very, very difficult to trade. But again, intrinsically, I think that's very much a case of a fait accompli for the pound versus the CAD. This one's too close. Pound Kiwi's too close to support for me to trade it. With that, stop loss has to go there. Entry has to go there, support's there. So I would say no, but again, the directional bias is there. So pullback maybe to the trade line or trend line that's going to appear there makes sense, or even the horizontal level that sits through here. So I get that. My watch list, however, is expanded to quite a few other pairs. The first of them is Aussie yen. Now, these are pretty obvious to me, and I've got to say that the false breaks that I trade have been producing very, very well. They're very, very reliable at the moment. And I think that's pretty much an obvious case with not so much the trending pairs, but the ranging pairs. Or as the trends reverse, then you're seeing a lot of this happen where price goes through a level. It doesn't even have to be a trend line or a trade line. It can be any level. It's going above it. It's consolidating, it's coming back below it, and what I wait for then is a pullback to the breakout area, or the break-in area in this case. So it's broken back in below that level and the trend line. So I'll pull back to there early in the week, perhaps tomorrow. That would be good. We could trade it short on Wednesday or Tuesday or Wednesday, if that were the case. There is a bit of a problem here in terms of reward. You're not going to get too much out of it in the first instance, but if it broke through there, then happy days. So for that reason, this is not the best of them. And as I said before, if the Bank of Japan's intervention doesn't gain traction, okay, we've had the big reaction from it. But if it doesn't gain traction, which is often the case with Bank of Japan interventions, this is certainly not the first time they've done that, then, pardon me, this big move for the yen on, well, Wednesday, Thursday, Friday, won't mean too much. That said, this could very well come back here, put in a lovely little head and shoulders, and then head south. But if it does set up as a bull bar on Monday or Tuesday, then I would be looking to trade it short, taking profit at the trend line. So that's definitely on my watch list. Next one, and this is related, of course, CAD yen is also on my watch list for very, very similar reasons. Again, this is the daily chart, and this is very much the same trade. And these will be the same trade, very much so. Pull back to here. Friday's daily pivot, Friday's daily pivot would be good, but certainly the trend line. And if that were the case, you've got an obvious target down here at monthly pivot for your first take profit. And certainly I'd be looking for that to be the case. There is a strong confluence area there as well. If you join up the dots here, by Wednesday, Thursday, you could be in this vicinity. And I think that would be probably a good place to, I won't say exit, but certainly getting something off the table there would make sense to me as well. So that would be on the watch list. But CAD yen, Aussie yen are going to be very, very similar trades. Euro Aussie, on the other hand, we traded this last week to the downside and got something out of it. I think now we're even in a stronger position to be trading Euro Aussie short. And this is exactly the same trade once again. We've had, let me go back to that weekly chart actually. The strong trend line there has been tested, and you'd be expecting a pullback here, most definitely. I have got in my sights this double bottom, however, and that means longer term, I'm probably bullish this pair. But at the moment, we're at that strong resistance level, and the daily chart to me is suggesting there's going to be some more downside. Again, I've got a break, consolidation, back underneath, and a retest of that trade line. If there's no gap in the market substantial in the morning, I will be placing a short below this bar here, and I'll be putting my stop loss above it. So that will be probably the first thing I do tomorrow. Check the charts. If there's no gap that's going to interfere with this, will be certainly on my radar. And the last one that's on my watch list is Eurocad. Guess what? It's exactly the same scenario. So put your trade line through here. You've got a breakthrough. You've got consolidation. You've got your re-entry below. All we're looking for is a retest there. So a bull bar on tomorrow or Tuesday. Then happy days. I'll be looking to trade this short. This is not as scary, if you like, in some regards as the others, because there is no double bottom in place. So I'll be happy to trade this short. And, if you're not short Eurocad from an intrinsic point of view, I'd be very surprised. But there you go. Pullback. Chloe's spoken about them. I'm speaking about them. And I think that's a very, very wise thing to do, is wait for those pullbacks to a nice level off which we can trade them. In Chloe's case, that could be an EMA trend line pivot. My case, exactly the same. Righto, guys, that is it for weekly Sunday market updates. Thank you for joining us. I hope you've gained something out of it, and can look forward to a week that produces something in your bank account. That's what we're here for. To do that, you have to, as always, trade carefully, and we hope you do that throughout the week. And we look forward to your company next Sunday, when we will do it all again. You're very, very welcome. Those of you who are putting a thanks in the box, we will see you next week. Thank you to Anita for looking after us. Have a wonderful week ahead. Bye-bye for now. See ya.